This video getting filmed on the morning of Saturday, May 9th. First of all, happy early Mother's Day to everybody. And we hope that all the mothers have an amazing and blessed weekend, even if it's virtually with their children, grandchildren, godchildren, adopted children, friends. We hope nothing but the best and hope everyone is staying healthy. We have a lot of things flying around right now in the accounting and tax world, and not that many planes landing, though. Wanted to give you quite a few things as an update for this week. First of all, my practical PPP advice is once at this point, the IRS and Department of Treasury have ruled that if you obtain the PPP funds, we've talked a lot about tracking them and eligibility, but if you obtain the PPP funds, if they're used for qualified expenses, then the loan would not be paid. You wouldn't have to pay the loan back, and it would not be considered taxable income. Conversely, those expenses would not be deductible, which seems somewhat logical, believe it or not. That's where we're at right now. My practical advice would be, if you do receive PPP funds, consider putting it in a separate bank account. I know some banks are requiring that, but worst case scenario, if you don't put it in a separate bank account, at least create a liability account in your accounting records. And then what I would do is I would post all your qualified PPP expenses over the next 8 weeks to that liability account, so you have an accounting for it within your accounting. Because we know what's going to happen is when this is all over, we don't know how it's going to happen exactly, but you're going to have to obtain certification that you do not owe the money back from the PPP. It's a fluid situation, and I'm going to keep posting new videos every week. So that's my practical advice on PPP right now. We have a couple things going on. Our friends at the American Institute of CPAs, they have been busy getting involved with a couple things I'm going to get you up to speed with. Oh, one more thing. Remember, please continue to go to our resource center and click on the links to keep yourself informed. But the ICPA basically came out and said, hey, we understand the PPP program, and we're going to take it upon ourselves to provide Senate some suggestions for administering the program. So that's what you're looking at right now, just a little bit of information about that. The AICPA also wrote a 11-page letter. That the previous one was 6-page, but an 11-page letter to members of Congress and the House or the Senate and the House of Representatives. And what they were looking for are some clarification and technical corrections on the CARES Act. And they were also requesting some changes to our tax administration. Just for those of you who don't know, the American Institute of CPAs is our largest governing body as a CPA profession, similar to the National Association of Realtors or Property Managers or the Teaching Association. So they're here to represent us as CPAs, and as CPAs, we're out to represent taxpayers. So the ICPA is requesting some technical corrections on the CARES Act. So the point is I think that the pressure that's being put on to the governing bodies and by some governing bodies to members of the government, I'm hoping we get some more clarity on some of these issues. I will say there are some interesting things that the AICPA tossed in addition to just asking for PPP guidance. They want to change the quarterly estimated tax payment dates, which I actually agree with. It's very odd that we have an April, June, September, and January quarterly estimated tax payments. So they're requesting that. They're also requesting that the capital loss carry forward of $3,000 be increased to $13,000 because this $3,000 capital loss carry forward has been that way forever. And again, there are several, I'm not going to go through this entire 11-page document, but there's several provisions that the AICPA is urging that are very much pro-taxpayer, and I hope that goes through, or at least they're considered. We talked about already the PPP when you use the PPP proceeds to pay for qualified expenses, those expenses are not deductible. It appears that the Senate doesn't feel like the nature of the bill warrants that, and actually is introducing a bill that's very much pro-taxpayer. Let me click on that to say, hey, we think there should be a deduction, even though the PPP funds are going to come in and they're going to not be taxable if they're used properly. On top of that, we feel that the taxpayer should receive a deduction for those qualified expenses. This has bipartisan support. So there's a decent chance this gets considered, and this is very much pro-taxpayer. So I'm surprised to see this, but pleasantly surprised. So the senators are putting that bill in and looking to change the IRS's mind, because IRS recently issued a notice to tell us that, hey, you can't deduct these expenses. 2 more items. I'm going to hit the PPP again. The ever-growing frequently asked questions list, which we do have linked to our resource center, has grown by 5 more FAQs. So this week, questions 40 to 44 were added. The ones of note here are question 40. They're talking about the forgiveness amount. What happens if your head count goes down? Because you're supposed to keep your head count, but what happens if a borrower lays off an employee, offers to rehire them, and they refuse to come back? Are you going to get penalized for that? And the SBA is saying, no, you will not get penalized for that. That's question 40. Again, you could read through these questions. There was some clarification needed on question 31 and talking about certification, and there was a lot of bad press for larger organizations that took the loan that didn't need it. And so the SBA extended the repayment date as a safe harbor date to May 14th. So that means the bigger companies that had some, quite frankly, some bad press, they're given till May 14th to pay these PPP loans back without penalty and with just a little slight slap of the wrist. That's called this new safe harbor deadline. Final issue, the White House didn't want to be left out this week. They have proposed, or they are mulling over. Remember, I said we have a lot of stuff flying around, but not a lot landing. According to NBC News, the White House is considering pushing the tax deadline to September 15th. I would actually not be shocked if that happens, because September 15th is the extended S Corp and partnership filing deadline, and also the due date for third quarter estimated tax payments. So if this occurs, that would potentially mean that your third quarter 2020 estimated tax payments are not due until September 15th. So I know this was a long video. Also, check out our Tax Tip Tuesdays, and please check out our Facebook page. We're going to be talking about CARES Act provisions and some future videos about net operating loss changes with the CARES Act. Thank you. Stay healthy. And again, happy Mother's Day to everybody. Take care.